Hello, everybody. So today I want to go over 8 solar stocks. It seems like solar is doing quite a bit better today because Enphase reported their earnings and they are seeing the demand pick back up slightly in Europe. They are predicting the bottom to be in Q1 and then Q2 being back to more normalized level and growth resuming in Q3 and Q4. And Enphase, of course, is the biggest company in the space. They're the leader in residential solar. And so I think that bodes well for the sector as a whole. The sector might have reached the bottom. In fact, the last time I covered this spreadsheet was about 4 months ago. And it's very impressive how much value has been lost in all these solar stocks. And, like 98% of my position in solar is in only one stock, and that's Enphase. And then I have a tiny position in SolarEdge, and then I have an even tinier position in Tigo. Tigo, I initiated something totally meaningless, and I consider this to have been a mistake. Nonetheless, I want to take a look at these 8 solar stocks and tell you a little bit what I think about them. Before I begin, I just want to say, you might notice on revenue growth, I'm putting 30% for everybody. Why? Because all of these stocks, analysts are lost, and they're all predicting about flattish revenue growth or negative 5%, negative 2% here and there. And that's entirely irrelevant because to me, it's a mega trend, and I want to know how that mega trend is going to be doing over the next 10 years. And in my view, that mega trend over the next 10 years will be closer to 30% a year. So that's why I'm putting 30% a year for every single company. Even if you don't agree, if you think it's going to be less or if you think it's going to be more, it's still very relevant to look at it like that because you can compare one stock to another. Every single stock is getting the same growth prediction, and therefore we can compare between stocks. So let me get started with Enphase. First of all, Enphase quarter was great. I listened to the full conference call. I'm very impressed. They are seeing a lot of hope in their new products. They're implementing GaN-based microinverters for IQ9 and IQ10. They're seeing a lot of money saved from these systems when they're going to release them in the later half of the year. They are seeing demand pick back up in Europe. They are teaching their installers how to sell batteries. Battery attach rate is going to be very high in the future. They're developing an AI system to manage energy at the level of the house. There's a lot of good things going on for Enphase, and even more importantly for Enphase is they are showing their pricing power because the gross margin on Enphase is 50% thanks to the ARRY subsidies. That has only been increasing. That has not dropped a single bit, and that's actually very good for Enphase. It leads to an EBITDA margin of 30%. So if you add EBITDA margin to revenue growth, you're getting a revenue growth plus EBITDA margin. So what I call the rule, right? The rule of 40. You're getting a rule of 60 for Enphase. So that's the better player out of all of these 8 stocks. And if you look at any metric, whether it's revenue growth, we're going to forget about that for a second. Whether it's gross margin or EBITDA margin, Enphase is the best. Enphase is the best in all of them. So I'm happy to own Enphase. The only regret that I have with Enphase is that I didn't buy more when it was closer to 100. But that was peak fear and peak FUD, and I'm happy about quite a bit in the 70s for Enphase actually when everybody thought that stock was going bankrupt. No, it's not. That stock is the leader in the space. It's the leader in residential solar, and residential solar is much bigger than commercial solar. The second player in residential solar is SolarEdge. I have a teeny tiny position in SolarEdge. SolarEdge went down much more than Enphase. I think a lot of the valuation delta between Enphase and SolarEdge can be explained by the fact that SolarEdge doesn't have manufacturing in the US or very, very little manufacturing in the US, and they're not planning on shifting manufacturing in the US. And even if they did, even if SolarEdge did that, the IRA is giving a benefit for string inverters that is twice as little as what Enphase is getting right now. So Enphase is designing its products. Everything is getting designed so that you get more IRA money. That's why they're moving into GaN semiconductors. Is also another example of power semiconductors where they're going to be increasing the power of the microinverters in order to get more money from the IRA, because the IRA pays on a watt AC basis, 11 cents on watt AC basis. SolarEdge can't do that with string inverters, and the benefit to make string inverters in the US is just too small, and string inverters require a lot more of human labor than just PCB boards, which is essentially what microinverters are. Microinverters are just PCB board in a shell. That's all it is. So I am supremely confident in Enphase's ability to scale, and to me, this will remain the top solar stock. I'm very happy to keep owning the stock. This is not financial advice, of course. SolarEdge, I have a tiny position. I'm keeping it, not increasing it. I somehow somewhat regret buying it quite a bit. But anyways, it's much cheaper, right? It's a much cheaper stock. But for these stocks, you got to look under the hood, and you got to look at the quality of a company. Tigo, let's talk about Tigo. Tigo is one of these stocks that I was really excited when this stock did its SPAC and became public. I was very excited about it. The CEO had done an interview on August 24, guiding stunning growth. And, of course, we were already seeing a little struggles in solar. And I see the CEO guiding stunning growth. And then in Q3 in October, we learned that actually the growth is not there. And so ever since that CEO interview, where a month and a half before declining all of the numbers and before telling us the numbers are bad, a month and a half ago when the company was freshly public, he was going ahead and telling us that, the growth was going to be amazing. My bet is that he knew in August that the growth was not going to be amazing, and he said it anyways. And the question with Tigo, the problem is the over optimism of the CEO. Or maybe the CEO knew the growth was not going to be good, and maybe didn't say that in the interview. But I would have never gotten into that stock if I had known that interview, was going to do a 180. We're going to get a 180 on the numbers later on. So the point is, I'm not happy with Tigo's situation. And when I look at Wall Street in general is also not happy with them, because you go public, you guide something, and you know full well that you have the same data, right? You have 3 months later, you do a 180. When you go public 3 months earlier, you are seeing that data 3 months ahead. And so to me, it's just a stark change in guidance from Tigo, which has prevented me from adding more to this stock. And you may remember my analysis. I did a full analysis of Tigo where I was pretty bullish on the product. But the question is, can you trust the management? That's a big question. And now that it's a $73 million company, it's a teeny tiny company. And it's funny because when I look at the valuation of Tigo, if I input the 30% growth, right, that would be the cheapest stock right there in my universe. It'd be about as cheap as HIMS, the same value as HIMS. So very, very cheap stock right there. The question is do we trust the figures, right? Do we trust the predictions from the entrepreneur at the head of this company? So that's why I'm not adding to Tigo. It's too tiny of a stock at this level in the $80 million. It risks delisting. Many brokers don't carry it. There's a bunch of other issues in being such a tiny issue. Anyways, let me move on to Sunpower. Sunpower I've covered on the channel before too. Sunpower, I call Sunpower the client of Enphase, because Sunpower is a major installer of solar systems in the US, and they have their own solar panels branded Sunpower. Everything's branded Sunpower. Their own software. It's everything Sunpower branded, except in the back end, they use Enphase's microinverters. So it's a rebranded Enphase microinverter. So Sunpower is actually a client of Enphase. And Sunpower was an interesting company for a little bit. It's frankly, it's an expensive company in my view. And I would be better off just buying Enphase and owning Enphase. Canadian Solar is a super diversified company. They have their own solar fields where they make their own energy for utilities. They have their own solar systems that they sell to residential homes, and they have their own commercial offering. So lots of good things going on for Canadian Solar on paper. The issue with Canadian Solar is they have a lot of debt. If you actually look at the market cap is much smaller than their enterprise value. So they have a lot of debt, and that could be a concern. The thing that Canadian Solar has going for it is that it's a very, very cheap stock. When I look at a stock like Canadian Solar, again, I compare it to Enphase, and I'm like, would I rather own Enphase? Would I rather own the best? Yes, I would rather own the best, and so I own Enphase, and I don't touch Canadian Solar. But there's no denying it's a cheap stock, and I don't think I would blame anybody for owning Canadian Solar. I think it plays a role in portfolio. That's a fine stock. Now I do want to talk now about equipment providers, whether it's Shoals ARRY Technologies or Nextracker Technologies. These three technologies are solar enablers, if you will. So Shoals is about connectivity and electric wires and making sure that you balance your system. They're balancing systems that help you install and set up and connect solar farms, giant solar farms. So they have a niche in the connectivity space of setting up these farms. In the cabling, right? The cabling. They sell the cabling. It's an interesting niche, but because of that, it's actually the most expensive company out of all of them, because they're not directly impacted by the slowdown. They deal with larger corporations, larger companies. And as a result of that, they have a steadier business. This is a business that has less uncertainty, and because it has less uncertainty, it's a more expensive business at 6 times sales, and even that metric is higher than Enphase. One of the only stocks out here that's higher. The only stock that is higher than Enphase, actually. On my usual valuation. The numbers are good on Rule of 40, by the way. For most of these stocks do well on the Rule of 40 numbers. ARRY Technology and Nextracker, these two technologies are racking systems, and they are these metal setups, metal systems in solar farms on which you install the panels. So they're solar trackers and solar installation setups. You know, all of this metal that you're going to put under the solar panels to set up your solar panels. So again, you're dealing with utilities, you're dealing with a steadier business, and as a result of that, these two companies are more expensive. It's kind of a side activity of solar. So you're a little more shielded, because these projects, whether the last 3 stocks were Shoals, ARRY, or Nextracker, these deal with projects that are decided over the long run. There's also very interesting aspects for these 3 companies about the bankability of their products. Like, their products can be financed by banks, which is like another reason why a lot of people invest in those companies. I would not invest in them. As a general rule, I prefer to own the pure play. I prefer to own the company that is going to be facing the customer, the company that is going to be at the end of the value chain. And so those companies would be either Enphase, SolarEdge, and TYGO. These 3 companies are at the end of the value chain. That's how I prefer to invest in solar. One last thing I'll say about solar is that I might be interested in starting to look at ETFs for solar, because the sector has been so beaten down. And I think if you see a general rebound as a whole for the entire industry, maybe ETFs could be an interesting play. Although I barely do any ETFs on this channel, I might be interested in looking at the pricing of ETFs going forward as well. But anyways, my second biggest position in my portfolio is Enphase, and I'm very happy with the results of Enphase. And solar's coming back. Solar's coming back. And as interest rates get lowered, it will come back strong. And that is my view. That's why I invest. So this was not investment advice, no financial advice, just entertainment. Hoping you were entertained. Please like, please subscribe, and have a wonderful day.